I know this is controversial. Most people say that there is no way to time the market. If we are interested in an asset like Solana, for example, we should just dollar cost average into the asset. We should not try to attempt to buy low and sell high. I disagree with that. I disagree with that because when we actually look at the data, when we actually run numbers, when we figure out the statistics, the structure in the price movements, there is a way to outperform the market. What you've just seen here in the background, that is the result of a backtest. A backtest of trading Solana. It's one of two strategies I want to share in this video. Here's the other one. The portfolio value in US dollars is the blue line. The portfolio value measured in Solana tokens, that's the purple line. And while I am not saying that those trading rules that used to work in the past have to work to exactly the same degree in the future, there is at least a higher chance compared to just randomly picking entry and exit point. Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and I did this mainly through active trading of cryptocurrencies. Now in this video, we're going to look at Solana. How can we time Solana in the best way? Now, most people got wrecked in the last 2 years, but 2 years ago, I started to publish my trades in real time, and we are currently at an all-time high. We made 47% per annum, and I'm publishing all of my trades in real time on the website that's linked down below. So I don't think there are many people in crypto that are willing to go that far to be that transparent. But maybe that's because their long-term chart doesn't look like that. With the current open positions, we are at an all-time high. So let's get into the Solana trading strategy. There's also a dedicated page on that. That's linked in the website as well. Let's start off with strategy number 1. This is something that I like to use for pretty much any altcoin. I try to figure out what is the best golden cross versus death cross. So what we're measuring here is the best moving averages. When do two moving averages cross that give us a bullish signal versus a bearish signal? And what duration should we use? So that's a fundamental idea. It's a fairly straightforward trading concept, but it works surprisingly well. So here we've got the backtest, the simulations of buying and selling based on different Solana moving averages. Now the best combination is the 14-day versus 31-day simple moving average. If you bought and held Solana, you would have gotten a bit over 100% per annum. If you traded according to that system, you would have gotten almost 400% per annum. The maximum drawdown also goes down. Instead of 96%, it's only 80%. And this is the result over time, the chart that this video started with. So again, the Solana price is at the top, and we want to buy whenever we get a golden cross. We want to sell whenever we get a death cross. We've already got trading fees and financing fees included in that backtest, so we're using perpetual futures. And for those results, that's done without any leverage. And for the results here, that's done without any leverage. This is where we are right now. We got a golden cross on the 28th of June. So Solana is actually right now bullish. This signal flips regularly. So of course, there's quite a bit of noise. There's quite a bit of active trading required, but I think it's useful to at least follow this signal. By the way, the exact strategy that we're currently discussing in this video is also available as a copy trading strategy. So you don't have to do any manual trading. We opened that at the end of February of this year. So we're already 28% up annualized versus buying and holding Solana. The other trend followers are also outperforming buying and holding the individual assets. But yeah, currently we are betting on rising prices with that copy trader. Now we can also optimize for leverage, and that's the following over here. So we can figure out what's the best short leverage, what's the best long leverage. For long, for Solana, that was 1.75x. For short, that was 1.5x. Now note, once you go too high on the leverage, the annualized return is going down. Now, why is that going down? That's because it's very hard to recover from the losses when there's too much leverage. Let's say you've got a 5x leverage and then Solana goes down by say only 15%. Suddenly, you've lost 75% of your capital. You need another 4x return just to go back to zero. That's why most people, they take too much leverage. If you currently use perpetual futures and you use 3, 4, 5, 6, 7x leverage, very often you're probably overexposed to the market and you're just waiting to get wrecked. Over the long term, we have to be very careful with leverage. At least if you cannot afford to lose your entire position. The optimal leverage for Solana on a very active trading strategy is just 1.75x. Now let's say you wanted to manually copy trade this. You're not in the business of deploying your capital on a decentralized finance protocol. Then you can do this the following way. So you go to tradingview.com, you enter SOLUSD, so you get the Solana price. And then on your keyboard, you hit /. In /, you can then type simple moving average. You click on the simple moving average, you get this plotted on the chart. Now we want to show the 14 and 31 day simple moving average. So let's change the style here a bit. Let's make this red and maybe in thick. And then over here in input, we put 14 and we press enter. Now we can copy paste the same thing again. We can double click, set the length to 31, maybe have a different color, hit OK again. And there we go. You've got the signals. You can just follow this every day. And what is important about this backtest, I forgot to mention this at the beginning, is that we do not trade within the day. So we are not concerned about crosses that might happen within the day. All we are interested in is at the end of the day, UTC midnight, is the shorter term moving average above or below the longer term moving average. And so far, Solana has been appreciating since we got the bullish signal. Have a look at this. This is when we got the bearish signal. This is when we bet on a falling price. So the last two signals, they were very profitable. And in general, this strategy tends to be very profitable. Every single year, this strategy made money, which cannot be said about buying and holding Solana directly, of course. And so when I get performance like this, right, something that tends to outperform that consistently, I don't think that just buying and holding is superior. Maybe the performance here will slow down at some point. Maybe the outperformance will diminish over time because markets get more efficient. Still, I think the risk to reward for the chart at the bottom is much better than for the chart at the top. I don't buy into the narrative that buying and holding an asset is the best. Otherwise, I also wouldn't be generating those kinds of returns. I simply like to use data. And instead of reading the news and trying to find a new thesis every single day, why don't we instead establish an approach that historically worked well? Now that strategy is just based on Solana directly. But let's talk about Solana versus Bitcoin, because the idea is when we get into a riskier asset like Solana, we should also expect long-term outperformance. Now this did work for the very early days. As in, this is Solana relative to Bitcoin long-term. The chart starts in 2020, and yes, at the beginning, Solana outperformed Bitcoin by 5,000%. But since April of 2021, we tend to trade in a range. Now there's many ways to look at this chart. We could say we've just broken out of a negative trend and that Solana should now appreciate from here. I'm not sure how likely that is. We are currently betting on a rising Solana price, but of course, Bitcoin, Ethereum does not look that bullish. Now, if we just take the data starting in May 2021, so that's when we got our sidewards trading range versus BTC, then we are currently very close to that long-term ratio. Why is this dotted line, so that's the average ratio in this time window? Why is this not in the middle but slightly higher? That's because we are looking at a logarithmic scale, right? On a linear scale, that's exactly in the middle. So yeah, we are at the long-term average ratio. Solana does not seem super cheap nor super expensive relative to BTC based on that measure. But again, those are lines in the sand. We can draw anything here. It's very hard to make proper predictions. I prefer backtests. I prefer data. And so let's have a look at seasonality. We look at Solana relative to Bitcoin, and we want to figure out since May of 2021, so since we started to trade in range versus Bitcoin, what week of the year tends to be good for Solana versus not so good for Solana. That's what we see in this chart. We are currently in week 28, which tends to be positive. We have seen how the last 2 weeks tended to be positive as well, which is also according to the long-term average. The next 2 weeks might be good again. Then we tended to have a negative week, but subsequently things were very, very bullish. So that's now the next 2 months or so. If we just buy and hold Solana for the next 2 months, if seasonality is a strong indicator, this should be the right approach. Now, how strong of an indicator is seasonality though? And the question is, does seasonality potentially get worse over time? Let's say ahead of time, you already knew this chart here. So you knew that at the beginning of the year, things tended to be a bit harder. Now in Q3, things tend to be a bit better. If you followed exactly this blueprint to trade Solana, you would have gotten this return over here. So you would be long the next 2 weeks, then we go short the week afterwards, then we go long the subsequent 5 weeks. That kind of an approach, following seasonality perfectly, would have given us this kind of a return. Now, unfortunately, at the very beginning, when Solana started trading, we had no idea what the seasonality would be. But what I like about this chart is that we could have known that seasonality already after 2 years, for example. And then the subsequent 2 years, it continued to perform. So this seasonality effect is not weakening significantly over time. It still continues to produce outsized returns. The Solana price here is of course in gray, and the US dollar portfolio value that's in blue without any leverage. So I like this strategy as well. There's no copy trading pool for that, but feel free to just screenshot this and use it as a reference point. There is a very good chance that over the next 2 months, Solana will do very well. And that's also in line with our Solana relative to Bitcoin chart, right? If we've actually now broken out of this bearish trend, then we should expect a bit of a rally over the next weeks. Now note that this is Solana relative to Bitcoin. This is not saying anything about the Solana price directly. Our very first backtest with the moving averages, so the 14 plus 31 day simple moving average, that was just on the Solana price. The seasonality chart looks at Solana relative to Bitcoin. When does Solana outperform BTC? Now I made a dedicated cheat sheet on the topic. When should we get in and out of various asset classes? You can download that cheat sheet for free in the link down below. You can either get it via Telegram, so you can scan this code, or alternatively click on the link, or you can get this sent to your email. It's 100% free, no payment is needed, no credit card is needed. It's linked down below. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.